All right, welcome. This is the second video in our series of beginner foundations for trading. Okay, today we are covering the topic of market structure and multi-time frame analysis. Okay, so if you look at any chart, here we have the Nasdaq on the 15-minute below, but you look at gold, you look at oil, you look at bond market, you look at any market in the world, and you'll notice that price moves in a very specific way, right? Some people will look at charts and they'll see is chaos. They'll see randomness. They'll say that there's no order, right? But if you look carefully, there is actually order in the midst of chaos that you need to see as a trader. If you're going to participate in the market and capitalize on some of its movements, you'll need to find the order that the market is moving in, right? Um, so we look at market structure to give us some of our directional bias and look at some ways to capture some of the moves in trending environments. So market typically has three phases, right? It has trending environments, right? So uptrend, right? It has ranging markets, right? So here we can have um, ranging markets where there's no clear direction, where it's going back and forth, sometimes not making any new highs or any new lows. Sometimes it is making new highs and immediately making new lows, but it's not trending in any direction. So that's what we can call consolidation or ranging market. Where trending, you are seeing a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And then oftentimes we can anticipate a change in structure, right? Or we call a market structure shift when price makes a lower low, right? So in an uptrade, it's making a higher low, but now it's making a lower low, a lower high, lower low, lower high, lower low. So that would show us a start of a new downtrend. Higher high, higher low shows us that we're heading up, right? And so trading is based off of probabilities, right? So when you're in a trade, most people do like trending environments. There are ways to trade ranging environments versus trending environments, and there are different strategies that you can use for either one. But typically, most people like trending environments. They do like trading with the trend. It does tend to give you, a higher risk to reward and a high probability as you're seeing price trending upwards. Essentially, you're looking for retracements in the trend and riding it up, right? So here we have an uptrend. We wait for a retracement, right? And you're typically buying up, right? And the probability is that price is going to continue going up. This is the basis of different theories such as Dow theory, right? So Dow theory is if price breaks a previous high, there is a likelihood for price to continue going up, right? So that's the basis of Dow theory, and so it's market structure, right? The momentum keeps the price going up. It overwhelms sellers, and price is trending up. So one way to trade is, again, you're waiting for the pullback, right? Typically, you can do something like wait to the 50%. So there are various ways. Some people look at this, this being the dealing range, right? So from here to here, that being the dealing range, or some people look at this being the zone, right? In the previous video, I did talk about supply and demand zones and how to mark them off. You mark off supply and demand zones by the valid high and the valid low that gets created leaving the zone. And when you leave the zone, you come back and you tap back into the zone, right? And so it is following market structure still, right? It's trending up. You're leaving the zone, you're coming back, and you're leaving the zone, right? So I like to mark off the zones for my entries. So if it comes back, you're looking for around 50% of the zone, right? And so you enter here, and your stop loss is at the low of the zone, right? And you're putting it to low of the zone because the probability is that your whole thesis for entering here is that you're following the trend of the market. you're more likely to head up than head down because you're trending up, and there's more than 50% chance that it's going to continue to trend versus reversing at this point, especially at the beginning of a trend. So you have trading is a game of probabilities, and so that alone, following market structure, can give you an edge of greater than 50%. That when played out over a series of trades, can give you a winning edge, right? So a couple ways that you can play this is you have this zone where there was previous significant buying, right? So you had sellers and you had buyers overwhelm the sellers, bringing us higher up. So presumably when we tap back into the zone, there are leftover orders here from the big buyers that can cause a reaction, or you have the buyers defending their position to create higher prices, right? So the easiest way to do it is to wait for price to come to around 50% of the zone, right? That way you have 50%, you have a one-to-one risk to reward, and you can take profits at the top of the zone, right? Or you can take, your profits at the top, anticipating that price is going to make a new high following the trend, and this will give you, very nice risk to reward, um, by taking a trade following the trend, right? So this is trend trading, following trend, waiting for pullbacks. And in the previous video, I did discuss specific zones that are responsible, right? That typically cause a nice reaction. So here, if if you refine these areas more on charts, you can look for supply and demand zones, near the 50%. Typically, there's a zone here. You can look at the mover region that would be here, or oftentimes you have the S&D are responsible for the break around the 30%, right? So when price comes down, you're looking for a reaction that takes you, further as a continuation of market structure, right? So market structure is quite important in determining directional bias. Um, and looking for entries on how to get involved, right? Um, Now for multi-time frame analysis, you notice that this is a 15-minute chart, right? Lower time frame can have market structure as well, right? And typically lower time frame facilitates or delivers on higher time frame objectives, right? So you'll have lower time frame with multiple structure breaks, where higher time frame is not having structure breaks, right? So on the higher time frame, right, we mentioned valid highs and valid lows to create zones, right? So this is a valid high and this is a valid low, but this valid low also becomes what we call a protected low, right? In order to maintain structure, price cannot go below and close below this low, right? If it closes below this low, then we consider that a structure break and potentially the start of a downtrend, right? So we consider this to be protected, right, on this time frame. On a lower time frame though, on lower time frame, it would look like a structure break, right, to come down to facilitate to a higher time frame objective, right? So something like this, right? It's coming down to a lower time objective, and then the lower time frame, what you can look for is what we call a flip, right, or change in order flow, or market structure break, right, where we have higher high, higher low, higher high, higher low, higher high, right? So here on the way down, lower time frame has flipped bearish, right? Meaning that the market structure has gone bearish, right? It's broken structure to the downside and it's making lower lows, lower high, lower low, lower high, lower low, until it reaches its objective, right? Which typically is a an area of supply and demand, right? Once it reaches the supply and demand, right, you want to refine your entry, right? So there are various ways to entry, right? So And that's going to be discussed in other videos, right? But I mean, but I did mention, entering around the 50% and getting your one-to-one, which is a profitable strategy. But it is possible to refine that further and look at the lower time frame to look for flips in order flow for a more refined entry with a lower stop loss, right? So market structure on multiple time frames um, is going to help you, right? So lower time frame delivers on higher time frame objectives. Higher time frame frames lower time frame, right? So you will see flips on the lower time frame, but know that higher time frame is king, and lower time frame is just delivering to those higher time frame objectives, right? And this can be on any time frame. This could be, say you have a daily chart or a 4 hour structure, and then you can have the 1 hour delivering to the daily, right? And and all that you have like the 15 minute and the 1 minute delivering to the 15 minute, and then you have the 5 second delivering to the 1 minute, and you can see that in every single time frame. Okay, so here going down, we have a current chart of the Nasdaq, right? So we just start off. We'll start off here. Okay. Oh, and one important point to note is that when we consider a breaking structure, you're looking for body closures. Okay. There are some instances. All right. So let me go back to this chart. There are some instances, right, where price can come and wick below but not close, right? So for example, here, right? So price can come up here. It hasn't broken structure, right? Because it hasn't gone above. But there are some cases where it'll just quickly sweep and immediately come back down, right? So we would not consider this a break in structure, right? We would just consider this a liquidity sweep and then a continuation of the trend. Okay, so that's going to be important to note when we look at some actual chart examples, as we'll notice sometimes price will come close to breaking structure, but then sellers or buyers immediately step in and continue the trend. So it's not a confirmed reversal. It is a continuation of the trend, right? So here we have the 15-minute chart, right? And you can clearly see any kid can see that we're starting to trend down, right? Especially here we have um, a series of lower lows, lower high, lower low. So let me show you like this, right? So here we come down, right? We make a high here, come down here, make a high, come down here, make a high, come down here, like that, right? And sometimes it's a bit difficult to see because it's kind of chaotic, right? But again, you need to find the order in the midst of the chaos and randomness. And remember how we defined a swing point, right? We required a valid high and a valid low. Right, so price came down here and it created a valid low, right? So this is the last bearish bar close, right? This one did not close below it. And we had a bullish bar closure above this bar, creating a valid low. And then we created a valid high here, right? So we would consider this a swing point or a zone, right? Now price came and it wicked below, but it did not close until here, right? So the protected low is up here, and this is where it closed, right? So it didn't close here. If it had closed below here, then this would have been a protected high, but because it didn't close until here, this remains your protected high, right? So price left it, right? And there's some wicks here, right? But no body closures, right? So this is still your low. Came back up and it wicked it, but it didn't close above, right? So this remained your protected high, and structure is still bearish because it did not close above, right? Had it closed above, we would consider that a potential flip to start trending higher again. But because this did not close above, it immediately saw a strong reaction and resumed the downtrend, right? We got a body closure below, right? So this, we would consider this to be a swing point, right? And so when marking swing points, we use go to wick to wick, right? So this is your protected high, right? Price comes back down, taps back into the 50%, right? And we gotta move, right? We have 50%, right? Taps 50%, and you get your move down, right? So a lot of people look at this, can do the one-to-one, and there's your one-to-one trade, right? So it continues to come down, makes a new swing point, right? Makes a valid low, a valid high, right? Price comes back, taps into the zone, and continues this trend, right? And you'll see that typically this is how price always moves, right? Price creates a zone, it leaves the zone, taps back in the zone, leaves again, right? Creates a zone, leaves the zone, taps back in the zone, leaves again, right? And this is just market structure. Creates a zone, taps back in the zone, leaves again, right? So there are strategies out there, like I said, that are trend trading strategies where you're trading just based off of market structure and the continuation of the trend. And there are some profitable strategies for that, but here, we do like to refine it and obtain, a better win rate and learn, figure out how to better capitalize on the market movements. But we may go over some of that, those strategies in later videos, right? So here, this is where things start getting interesting, right? So price comes down, right? Creates a swing point, right? It leaves it, comes back, but fails to make a new low, right? So this potentially could be an indication of a change in order flow, right? Price is starting to come down. It looks fairly tired, exhausted, and it's failing to make a new low, right? After it failed to make a new low, it's ranging, right? So range means it's failing to make a new low, failing to make a new high, until finally it flips, right? So we see that it flips, and it flips bullish, right? So here we were bearish, and now we just flip bullish, right? So it created this zone, it left the zone, it tapped back into the zone, and it's continuing a bullish trend, right? It's continuing a bullish trend. So we have here, these swings now are getting a bit smaller, right? So this is a large zone right here, right? It created a zone, left the zone, tap back in, and left again. So is this a zone? Yeah, so you have this little zone here. We eked out a closure above. So this is actually not a zone because it's not a valid high or valid low. So we might not consider this to be a zone, right? But we would consider this one to be a zone, right? So here we have a valid high. So the last bullish bar with the body closure below. Looks like it just eked out the body closure. And we have a valid low put in here. So we consider this a swing point or a zone, right? And so we see here that price left the zone to the bullish side. So the bulls buying pressure overwhelmed the selling pressure here and continue to trend up. Tap back into the zone, right? Continue back up. You have another swing point here, right? Valid high, valid low. Broke above, right? Tap back into the 50%, continued on, right? And had quite a large move, right? And now this is the last swing point that we see here to the upside, right? We have a valid high, last bullish bar closure below, and then a closure above. So we have this large swing, and then we see a change in order flow, right? Price comes down, and it closes below this zone, right? It closes below. So this is a protected low, right? If the trend were to continue, you would expect that this would hold, right? Maybe wicks below it and continue up, but in this case, it broke down, and now we're expecting a downtrend, right? So here we have, right? Let me clean up some of this. Okay, so we have this zone, right? So you had buying and sellers, and then sellers overwhelm the sellers, right? So let me change the color for this to make it easier to see, right? So zone here. So came down. This is now a protected high, right? So we had just a straight movement down, right? There's no zones created here, right? No swing points until here, right? We had a bearish bar with the body close, creating a valid low, creating a valid high, right? We did range here for a bit, right? Um, but we would consider all of this one large zone, right? So we came down, created this low, book structure, came up, right, and broke down again. So this is like this, right? And now, so it looks like we are continuing up higher, right? So this could have just been facilitating to a higher time frame objective, right? So this could be facilitating to an hourly objective, right? Who knows? Right? So this could be just an hourly swing point. But anyway, so it came down and it did trend down. It broke this structure, came up, and it made a new low again. But it started to make higher highs, right? So it right away it broke to the upside, and now we would be bullish again, right? So this would be um, almost like a ranging environment, but slightly skewed to the downside, right? You can see that price struggled here, right? So price came back up, and we didn't see any follow through on this movement, right? We started making lower time frame structural higher. This is what we call internal structure, right? So the regular structure is down with these larger swing points, right? And this is just lower time frame internal structure facilitating its move back up, and eventually it fails to see follow through to the downside. Eventually breaks this protected high, right? So it breaks this protected high with force, right? So we have this zone like that, right? This zone that gets created. We tap back into where the 50%, right? And then we go higher, right? And then we go higher, and then create this valid high. We pull back, go higher here like that, right? So we created this zone here, right? Price came, left the zone, tap back, and tap back in, and then made one final push higher up, right? And eventually we broke structure to the downside. This one is not as clean actually. Um, you might have to look at a different time frame, like a higher time frame, to get maybe a more clear picture. Right? Sometimes the lower time frame, 15-minute, could be considered lower time frame if you're used to looking at 4-hour charts or daily charts, right? But here then we see a change in order flow again, right? You see that this is the protected low. Price comes back up and it breaks that low with closure and it starts trending down again, right? So here you would be looking for shorts, right? Your bias is shorts, right? So sometimes it looks chaotic, looks random, right? But if you look and try to find the order in the market, you'll notice that it follows structure, right? And you're best off looking for trades in the direction of structure unless you are experienced and have strategies to trade counter structure. Trading with structure is going to give you the higher risk, higher reward as you're trading with the trend and gives you the longer moves. Whereas in counter trend structure, counter trend trading, can definitely give you scalps. You can scalp back into the zone, right? But those are typically just scalps, and then where the longer move is with the continuation of the trend, right? Until the trend changes and you're looking for longs, right? Here trend changes down, you're looking for shorts, then you're looking for longs again, and you're looking for shorts again. Right, so that's the basics of market structure. Right, for multi-time frame analysis, again, you're considering that lower time frame is facilitating to higher time frame objectives. Let me see if I can show you an example on the higher time frame. Clear some of this. Yeah, so you have, this is a 4-hour chart, right? So right now Nasdaq has been very bullish. Okay, in the 4-hour chart you have higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Got our first pullback, right? So the pullback is just facilitating to a higher time objective, which in this case looks like, it's like a zone here, right? Like I mentioned, it's oftentimes going back to a area of supply and demand, right? And then it's resuming its trend up, higher high, higher low, higher high, higher low, higher high, higher low, higher high. And then here we see a flip, potential flip that occurred, right? So this is your protected 4 hour 4 hour protected low, right? So you have, your last bullish bar, which looks like it's this one, right? This one didn't close above. And then we have a bearish close below. And actually right here we had a bearish close below. So creating a swing point, right? So you have something like this, right? And that's your last swing point. Here there's no swing point. You had this large bar up with no valid high put in till we came here. And then we came down and we actually had a closure below it, right? So potentially what this is telling us is that this is potentially the beginnings of a reversal, right? So you had now this larger zone that was created on the bearish side, right? And price came and closed below. So potentially, what I'm expecting is that price left the zone, created the zone, left the zone, retraces back in the zone. It's fairly deep retracement, and probably a lot of people thought that we're continuing long. But had you followed the rules of market structure, you would be anticipating that this is just a pullback, and we're gonna potentially continue lower. And where can we go lower to, right? So potentially, our higher time frame objective, right, maybe somewhere around here, right? So we potentially can pull back here, make a series of swings, lower low, lower high, lower low, until it meets its objective, and then maybe resuming higher, or continuing down further until it meets, some sort of higher time objective, maybe a move origin, SNDR, which already was met, you know. Um, so we can anticipate movement like that as we understand market structure and the way that price follows it, and giving it a higher probability, right? But as you know, right, it is based on probabilities. We saw in a 15-minute, that sometimes structure can change faster than you would like, right? Faster than you would anticipate, right? We had the structure break down, but it only gave us kind of two swings before it resumed up again. Right here we have what looks like a breaking structure, but keep in mind this is not a swing point, right? This is the protected low, right? This is the protected low because you have a valid high, valid low. Price came up and came down and tapped it, but didn't break structure here. So we're continuing, because it didn't break structure, we're thinking that it's going to continue higher, and it certainly did, right? So if you had saw that it didn't break structure and you got in along here, you would have gotten in for a massive move had you hold anticipating that the trend is going to continue and got this high. All right, so that's the basics, foundation of market structure. Understanding multi-time frame analysis, where lower time frame you will see breaking structure in a lower time frame, but it's facilitating to higher time frame objectives. And in the future, again, we're looking at lower time frame entries um, that again follow the rules of market structure to anticipate flips in certain key areas, right? But everything is market structure. This is the foundation of what you want as a day trader, or even swing trader, or any type of trader. Is looking at what is the trend over a trend, what is the strength of the market, how far has the trend gone, looking to anticipate things like ranging environments, and resuming a trend or reversing a trend, and looking to anticipate how to partake in the trending environments. Okay, hopefully you guys enjoyed this short video, and I'll see you on the next one.